Hello, AAA students. Hope you are doing well. So today we are going to start past papers of AAA, and the past paper which we have selected today is December 22, question number 1, Mercurio Company. We will solve the complete question number 1 in today's lecture. Then tomorrow we will solve question number 2, and after means on next day we will solve the question number 3. So in this sequence we will complete the all past paper questions. Now question number 1 comes for the 50 marks out of 50, 10 for the professional and 40 for your answer. In order to gain the professional marks, I will explain how to gather the 10 out of 10 professional marks. Question number 1, Part A come from the business risk. Question number 1. Part B for the risk of material misstatement or audit risk. Part C audit procedures, and Part D it could be from block 2 ethics and block 1 any topic. So we will cover which topic is tested in question number 1 part D. Let's read the question. Okay, before starting the question you have to before starting the question you have to open this question paper for your concepts. So you have to open these questions on your CBE platform. Also you should have your calculator in your hands before solving this question. Let's read. It is 1st July 2005. You are an audit manager in Arnott and Company, responsible for the audit of Mercurio Company, a listed company, with financial year ending 30th September 2005. The year end is 30th September 2005, and this is a listed company. Highlight this word. This is a listed company. Okay, so listed company, highlight it. Okay. Now, Mercurio Company is the country's leading specialist retailer of small domestic pets, pet food, and pet accessories, operating 264 stores across the country. In this line, the examiner gives us the detail of the client nature of business. The following exhibits 1, 2, 3, and 4 available on the left hand side of the screen provide information relevant to the question. Exhibit 1 belongs to partner's email, Exhibit 2 background information, Exhibit 3 selected financial information, and Exhibit 4 meeting notes. This information should be used to answer the question requirement within your chosen response. Okay, it is not mentioned in this slide that the client is a existing client or a new client. But in general, if the question is silent, so we assume that the client is an existing client. Okay, let's check the requirement. Respond to the instructions in the email from the audit engagement partner. In the question number 1, all the requirements you will get in the partner's email, which is Exhibit 1. Okay, professional marks will be awarded for the demonstration of skill in communication, analysis, and evaluation, professional skepticism and judgment, and commercial acumen in your answer. I will explain each and everything in detail once we move to the answer slide. Now read the exhibit number 1 partner's email. Exhibit number 1 is very important. Why it is important? Because it gives you few things. The first thing is it gives you about the materiality threshold information. In the exhibit 1, partner told you which threshold should be used in order to determination of the materiality. Also, exhibit 1 gives you the type of or requirements. Let's say the part A is evaluate the significant business risk faced by Mercurio company for 8 marks. 2 1 businesses carry 2 marks, so we have to write 4 business risk. Part B, evaluate and prioritize the significant. If the examiner mentioned or not mentioned about the prioritization, now you have to prioritize. How you have to prioritize, we will cover in the answer slide. Evaluate and prioritize the significant risk of material misstatement which need to be considered in our audit planning. Please note that you should not evaluate risk relating to the audit of animal inventory, as these will be addressed separately at a later stage by an auditor's expert as in prior year. So it means we do not have to identify any risk regard to animal inventory. Now, you should use all exhibit when carrying out the requested risk evaluation. Now, in this question, there is no restriction that we have to keep ourselves towards the exhibit 2, 3, and 4. But in this question, we can use all the exhibits. Now, part C, discuss and conclude on the impact which outsourcing the credit control function will have on our audit planning. If you watch my lecture 9 or lecture 8 on block 1, which is outsourcing, then you will solve this question. Otherwise, you will just watch my recordings or all the content or answer will pass by you. Part D, design the principal audit procedures to be performed in respect of the holiday pay obligation for 7 marks. Okay, let's read the engagement partner mail. Now, question number 1 always asks you to prepare or draft a briefing note. If you can see, I require you means engagement partner requires us to prepare briefing notes for my use, in which you have to explain all these requirements. So how you will draft the briefing notes? First, you will write the heading of briefing note, then the to will become from and the from will become to. Why? Here engagement partner sends you a email, so it means to become from when you writing a briefing note, and the from will become to because you are sending it to the engagement partner. Subject and date will remain the same. Let's read. Hello, with the year ending approach, I need you to start planning the audit of Mercurio company. We are at the planning stage in question number 1. In the risk assessment, we are always at the planning stage. I met with the company's finance director, Kat Fleming, last week to discuss recent developments for the business. I have provided you with a summary of the matters discussed at the meeting along with some projected financial information. Based on the analysis I have done on this industry, it is appropriate for overall materiality to be based on the company's profit before tax. Now you can observe how important the exhibit 1, because in which all the accumulated details regarding the business risk and the development or the materiality threshold is explained by the partner. Profit before tax, as this is a key measure for investors and providers of finance. I require you to prepare briefing notes for my use, in which now, if you can see, there are already recent developments and there are financial information, and the if you read from here, that the overall materiality to be based on profit before tax, as this is a key measure for investors and providers of finance. It means there is a possibility that the client will obtain source of funds. So now the threshold for the PBT is 5% or 10%. 5% is the lower end and 10% is the higher end. So if the client is listed and an existing client, we always use mid percentage, and the mid percentage of the 5% and 10% is 7%. Don't take it 6.5, 7.5. Choose it either 5% or 7%. It's all on your judgment. You can either choose 5%, but you have to give your justification, because if you see the professional skills mark, in which it is mentioned that the professional judgment and skepticism should be there, so it's all about your judgment. That's why if you follow my rule, then you can choose 5% or 7%. If you are choosing the 5%, then your answer will be like this. This is an listed client and there are some risk and the recent business development. That's why we believe this is a high risk client. So that's why we have to select the 5%. If you are choosing 7%, then your answer should be like this, as this is an existing client and there are some recent development. That's why we should choose a mid percentage, which is 7%. Don't go for the upper end for 10%. Now close this one as we have nothing to do with this exhibit anymore. Let's move to the background information and please start highlighting the content. Okay. Now, Mercurio Company is a large listed company established 15 years ago when the founders observed a growth in demand for pet related products. The company has grown steadily and is now the largest retailer of pet related products in the country with over 7,000 employees who are mainly staff working in the stores. As well as selling pet related products for a wide variety of animals, the stores also sell small animals such as rabbits and fish. Staff members are fully trained to give advice to customers on matters including nutrition and general animal health, and staff members are also trained in handling all types of animals which are sold. Some stores sell more unusual pets such as spiders, snakes, and other reptiles and require compliance with specific import restrictions and welfare standards. Now highlight from some stores till welfare standard, because there is a possibility that there might be a non-compliance. So you have to highlight this as well. Okay, this can be your business risk as well as audit risk. Once we move to the answer, we will write. Mercurio Company also operates veterinary clinics within most of its stores. The veterinary clinics are staffed by fully qualified vets who offer a full range of veterinary services. Customers can pay as they go for appointments and treat of their animals, or they can take out an annual pet healthcare plan which covers the cost of essential vaccinations and quarterly health checks. The pet healthcare plans are extremely popular as they offer good value for money to the customer, and the annual income from sales of these plans historically accounts for 10% of the company's revenue. Means out of total revenue, 10% revenue comes from this plan. If you again read from here, customers can pay as they go for treatments and treatment of their animals, or they can take out an annual pet healthcare plan. What do you think? If any customer go to the clinic for this, for the treatment of their pets, and they pay the upfront fee or whatever fee, let's say in advance, what do you think this will result in a performance obligation? Don't you think the Mercurio company will recognize revenue at the early stage, even though the performance obligation has not been satisfied? And the as per IFRS 15 revenue from contract with customer, we can only recognize revenue when performance obligation has been satisfied. So in this case, there is a possibility that there is early recognition of revenue, due to which revenue may be overstated. Now, the cost associated with the vaccination and health checks have risen over recent years. If cost is increasing significantly, so it can affect our profitability. However, Mercurio has not been able to increase the prices due to customer price sensitivity over annual pet healthcare plans. Now, here Mercurio is not able to increase the prices due to customer sensitivity. It means if the Mercurio will increase their price, they will lose or left with their customers. So now there is again a clear hand. We have to check whether the revenue is increasing or decreasing. If the revenue is increased, means the increase is significant, then there is a possibility of the early recognition of revenue. The company's accounting policy is to recognize the revenue from the sale of a healthcare plan on the date when the healthcare plan commences. Now, almost two paragraphs just on the revenue. So many information on the revenue. Let's close this exhibit and move to the selected financial information. Okay. So now, extract from the management accounts of Mercurio Company for the year ending 30th September 2000 X5 projected and actual. Now we are in the 2005 and the data is projected. Let's check revenue. Last year it was 745 and this year it is 803. So of course there is an increase. Operating profit last year it was 110 and this year it's 172. Last year the PBT was 56 and this year it's 60. Just a slight increase, not a significant. So we have to argue on that. Extract from the statement of financial position. Don't do you think the increase in operating profit means operating expense? How will you calculate the operating expense? This is operating profit means after deducting your operating expense, and once you calculate the difference, 803 minus 172 gives you the operating profit, sorry, operating expense. So the deduction or the increase in operating profit is due to penalties or fines. We just covered in the exhibit 2 para number 1 that there is a requirement of compliance with reptiles and snakes. Now total assets included in the total assets related to store purchase from Blackwell 171 million. Only a major addition of this year. Trade receivable 22 to 42. It means our customers is not paying us. That's why we have a receivable of 42. Goods in transit, we have some inventory which is in transit, which is 12 million, and the cash and cash equivalent 36 million. Includes in total liabilities holiday pay obligation 21.1. It's also increased. Whenever liability increase, we have to identify the reason. Employee number. Last year it was 6,200 and this year they are 7,000, means 800 increase. Bank loan 75 to 251. Oh my God, sudden or a significant increase in bank loans. Current ratio, gearing ratio. Now read the notes. Assets relating to stores purchased from Leckwell Company. To expand into new locations, 20 stores were purchased from Leckwell Company, a clothing retailer on 1st May 2000 X5 at a cost of 171 million. These costs are very important for your part B, which is risk, because you have to compare these figures with the materiality. Now, Mercurio Company purchased the stores using their cash reserves. Okay, Leckwell Company was facing going concern problem. Again, this can be a business risk. Leckwell Company was facing a going concern problems and offered the stores for sale as part of the restructuring program. If the company is facing a going concern problem and they have a significant loan, don't you think there is a breach of covenants? Means there is a possibility that the bank or the financial institutions can demand immediately repayment of their loan, and due to which company will have to record all their non-current assets and liability as current ones. The stores need to be completely refitted at an estimated cost of 9 million each. Mercurio Company's management has not yet decided how many of the stores will be retained for use in the business. This is vague response. They have to make a decision. Any which are not retained will be sold. The stores will be refitted during the period November 2000 X5 to January. They have to make a classification as per IAS 16 and as per IFRS 5 non-current assets held for sale. If they are not yet decided, so there is a misclassification error. Now, trade receivables. While the majority of sales are for cash, an increasing number of customers have credit accounts with Mercurio Company. The company offers credit customers 60 days credit to pay for goods. The forecast trade receivables balance at 30th September 20x5 is 42 million. Last year it was 22. Due to the growth in sales to consumers on account in December 2004, Mercurio Company engaged Fairbank, a service organization, to provide the credit control function, on which we have to write answer for the part C. Goods in transit. In June 2005, Mercurio Company purchased 12 million of pet food supplies from an international supplier. With the sales contract starting that ownership of the goods passed to Mercurio at the date of shipping. Ownership means during transit, the ship carrying the goods was involved in an accident which destroyed the entire supply of goods. Risk and rewards has not yet transferred. Ownership transfer is not a valid justification. Risk and transfer should be valid. Now, Mercurio Company's directors had arranged insurance on the shipment of goods. We have to check the insurance policy, and the policy states that 80% of the goods destroyed are covered by the insurance. The latest correspondence from the insurance company was an informal email. Informal email. Oh my God, that the claim had been received and was due to be processed. This is a suspicious or invalid justification. These purchases are made in Mercurio company's operating currency, means it's in functional currency. Part 4 is about the procedures, which is part D. Mercurio company has an internal audit department who have been testing the controls in the company's payroll system. It's good. Internal audit procedures have revealed that some employees are duplicated on the payroll system. They are ghost employees. This seems to have happened when two different systems used for recording full-time and part-time staff were merged in October 2004. No, this is not, and this will not happen if your systems are managed by the competent staff. Additionally, the internal audit team's procedures have found that while the systems have the capability of recording holidays taken by the staff, this is not always used. And manual records are also maintained in relation to holiday entitlement. Employees are entitled to carry forward a maximum of 3 days of unused holiday entitlement to the next year. Okay. Management estimates a holiday pay obligation relating to unused whenever there is a word estimates highlighted because it involves judgment and uncertainties. Relating to holiday entitlement at the year end using the previous year's obligation means they are estimated based on the previous obligation, which is also a vague justification, and adjusting it for pay rises and challenges in staff levels. The holiday pay obligation forecast for 30th September 20x5 is 21.1, whereas in the last year it was 11.6 million. I think that's it for this exhibit as well. Okay, let's close this one as well and move to the last exhibit. Meeting with K Cat Fleming, Mercurio Company Finance Director. Okay, this year has seen a significant business development for the company. The company started to sell products under its own brand name, introducing the Mercurio range of premium pet food and accessories. The products are manufactured in another country and imported, means imported, so there is a currency risk, price volatility, and purchases, or there is a possibility that high cost should be paid for the import, which can affect the profitability as the company is also in the going concern stage. And purchases of Mercurio brand goods from foreign suppliers are predicted to be 7 million for the year to 30th September 20x5. The range was introduced for sale in June 2005 and was heavily promoted, means they are doing high marketing. That can also be a major factor of not that much increase in the profit. Having been only recently introduced, sales of product from Mercurio range will be insignificant in this year's financial statement. Uh, if the sales is also insignificant, then in the revenue in the exhibit 3 we have seen a significant growth, which again is a hint of early recognition of revenue. However, projections in the management accounts indicate that the Mercurio range is expected to account for 30% of revenue in the financial year to 30th September 20x6. Again, this is expectation projection, we can't rely on it. During the year, Mercurio company took out an additional bank loan to add with cash flows. Also, they are facing liquidity issues, and again, Mercurio company took out an additional bank loan. Again, this is a big hint to add with cash flows for the new Mercurio brand promotion and the forthcoming refitting of the stores purchased from Well company. It means Mercurio company obtain a fund for their new brand name. So there is a possibility that the new brand just only be created for this extra loan purpose. Let's move to the answer. Let's move to the answer. There are some points for you. Mercurio Company December 22, question number 1. Important points. Question number 1 covers 50 marks, 10 marks are professional, whereas the 40 marks for your answer. Part A usually comes for the business risk. In this question, it is also a business risk. Part B for the significant audit risk, risk of material misstatement. Part C for the procedures, but in this case, part C is about the outsourcing block one topic. Part D for the ethical issues or matters to be considered, but in this case, part D is about the procedure. So shifting or sequence can be changed. A structure of the question number 1 is given below, means how you will have to make the structure. Briefing note 2, as the engagement partner, exhibit 1, to become from, and from become to. Okay, to means we are sending or giving it to the engagement partner from us, so we are audit managers. Subject, planning of audit date 30th September 20x. In this case, it was 20x5. Introduction. This briefing note addresses the remaining copy paste from your requirements. Part A requirement, Part B requirement, Part C and Part D requirements. Part A, business risk. In this case, we have to write for risk as total marks are 8. So 1, 2, 3, 4 business risk with their headings. Part B, in this case, we have to write significant audit risk or risk of material misstatement. Whatever it is, just give a heading and then start with the materiality. In this case, we have to determine the materiality based on PBT, profit before tax. Calculation of materiality and explanation gives you 3 marks. Basis, refer to exhibit 1 as given by the partner. Now, after out of total risk marks, mean out of total part B marks, you have to deduct 3, then the remaining will be allocated to the risk. Let's say remaining marks are 14 or 16, 18, it could be. So you have to at least write 5 to 7 risk, as one risk carry 3 marks if it includes the materiality amount. Risk with the material amount 3 marks, control risk only 2 marks. Conclusion. Then in the audit risk question, in the part B question, you have to give a conclusion. Okay, the conclusion is only for the part B, not for the part A. There is an exception of evaluation. Even in this question, for the part A, the examiner used the word of evaluate, but in the risk questions, in the business risk, you do not need to give a conclusion. But for the part B, it is mandatory to give a conclusion. Otherwise, you will lose your marks and you might be at 48 or 49. So conclusion is must. How you will write a conclusion? Prioritize significant risk, higher material items over control risk. Means the risk you prioritize based on higher material amount will be your conclusion. Part C, audit procedure, use these verb, review, recalculate, correspond, discuss, inquire. And part D, it could be ethical issues and block one topics. Let's start. Professional marks in this question. Professional marks will be awarded for demonstration of skills in communication, analysis and evaluation, professional skepticism and judgment, and commercial acumen in your answer. Let's bifurcate one by one. Communication. Use appropriate briefing note report format. Clear headings, subheadings, intro, and conclusion. Begin with a concise intro outlining what the notes report cover means the requirements. Language must be professional and audience specific, direct and relevant to the engagement partner. Structure content logically, risk-based order or importance means you have to prioritize your risk. Close with a clear conclusion. Analysis and evaluation, moving through both sections. Contextualize everything. Use scenario details to assess financial, ethical, legal, regulator issues. If examiner gives you that you have to go through or follow all the exhibits, and if you pick the risk from exhibit 1, 2 and 3 and you left with exhibit 4, then you will lose your professional marks. Investigate, locate key facts, calculate materiality, perform analytical procedures means comparison. Evaluate, appraise impacts and trade-off, example implications of not adjusting a misstatement, draw conclusions and link analysis to actions recommendations, flag gaps, highlight missing data and suggest further audit procedures or information. This is for part C. Professional skepticism and judgment, question and challenge assumptions, estimates data reliability from client and scenario, apply spectrum of risk, identify, prioritize, and justify highest RO and M risk of material misstatement, reflect on sufficiency of all evidence, basis of provision, amortization policies, justify priority ranking in conclusions, show professional judgment. Commercial acumen means business knowledge or business risk. Understand client context, business model, sector, external environmental factors. Identify business risk, market, regulatory, going concern, expansion, and pressure. Let's solve this question. This will be your heading briefing note. Then to Ted Hastings, audit engagement partner. In this question, the engagement partner name is Ted Hastings. From audit manager means you. Subject audit planning, Mercurio company. Date 1st July 2000 X5, as today is 1st July 2000 X5. It's mentioned in the start. Introduction. The purpose of this briefing note is to value the significant risk of material misstatement. Also, it includes audit procedures and the impact of outsourcing. Look how I precisely write all the four part in this introduction. Then you're heading significant business risk, or you do not need to write a significant, just write business risk, whatever you want. So first risk is import and welfare restrictions. If you clearly read the questions with me and the exhibit 2 notes, then you will identify this thing. Import and welfare restriction. Some stores, I have picked this line from the question. Some stores sell more unusual pets such as spiders, snakes, and other reptiles and require compliance with specific import restrictions and welfare standards. From some to standards, exact copy paste from the question. Then explain. Mercurio company needs to be very careful in order to comply with import and welfare restriction. First, you have to pick a statement of fact, then explain why it is a business risk and how it affects on the business. Mercurio company needs to be very careful in order to comply with import and welfare restrictions. However, any non-compliance can result in a ban on import license for reptiles and snakes and also be penalized by the welfare standards, which can affect the reputation of the Mercurio company. You do not need to write all the things that it could affect your profit, it could affect your revenue, it could affect your customer. This is not a valid business risk. You have to write a good and case specific words. Okay. And how you will write such words? If you have covered my lecture on business risk, then only you can write such words, because I have write down a list of all the important business risks and its wording. Okay. Stagnant prices. Mercurio, if you remember, there is a line that due to price sensitivity, customer Mercurio company has not increased their price. Mercurio company has not been able to increase the prices due to customer price sensitivity over annual pet healthcare plans, even though the cost of the vaccination and health checks have risen. Again, copy paste from the question. This price sensitivity approach can result in low revenue for Mercurio company and increases cost, which ultimately impact its profitability. Now I have written down the impact. It will give me an extra mark, as the 10% annual income comes from sales of these plans. As Mercurio company is a listed entity and the major interest of stakeholders is in profit, it might result in a loss of market share. Look how I explained all the valid things related to stagnant prices. Client is a listed company. If their EPS or profit will go down, then it affect the institutional investors, means loss of market share. Investors will take out their shares. Imported products. The products are manufactured in another country and imported, and purchases of Mercurio brand goods from foreign suppliers. Again, copy paste from the question. This can result in significant cost associated with letter of credit margin LC. Whenever you are going to do import, you have a document called letter of credit, means it is a guarantee letter of credit margin with the bank and import license cost. Also, due to the changes, if you do not know about these documents, don't worry, as I work in the field of audits, that's why I can write such terminologies. But don't worry if you don't want to write. Also, due to changes in foreign currency, there is a high risk of currency volatility, its brutality, which can further result in fluctuation in foreign currency for Mercurio company. Furthermore, if the products are not up to the mark for customers and any default occurs in the products, this can further impact the Mercurio range brand, means new brand which they have just introduced. Look how I molded the word and linking it with the exhibit. Working capital. The trade receivables of the Mercurio company increased by 90.9% this year. This is significant increase which shows that Mercurio company offers long credit terms to its customers. If you can go and check financial information liability, then liability is increased. That's why I have written this line, offers long-term credit to its customer, as the Mercurio company offers credit to customer 60 days, sorry, receivables. If you can see the receivables, they are increases to customer 60 days credit to pay for goods can result in working capital issues for the Mercurio company, as the receivables from the customers are significant and the cash is depleted, means reduction significantly by 55.5%. You have to identify or calculate this percentage. How you will calculate 55.5? Last year figure minus current year figure divided by the last year figure, okay, gives you this percentage increase or change this year. Therefore, Mercurio company can face liquidity issues if such credit terms continue to be offered to the customers. Gearing ratio, it's already given in the question. The gearing ratio, why we calculate the gearing ratio? Because it is best for the business risk or for the financial loss. The gearing ratio, high gearing ratio means high chances of risk, as debt to equity ratio. It is also called debt to equity ratio. In your numerator you will enter debt, and in the denominator you will enter equity. The gearing ratio of the Mercurio company has increased significantly by 20% this year as compared to the last year. This shows that the Mercurio company is in high debt, which can further be seen by the loan amount of 251 million this year. Look how I link with different points. However, such a gearing ratio can increase the financial risk for Mercurio company as the cash is depleting, so the bank can demand immediate repayment of the loan, which can affect the going concern status of the Mercurio company. So this is for the business risk, how you have to write a valid and a specific business risk. Let's move to the significant risk of material misstatement. You will have to write a heading, then materiality. Always start with the materiality. In this case, engagement partner asked you to choose PBT. The materiality for the Mercurio company is based on profit before tax. Profit before tax, the determination of the materiality is based on 5% lower end and 10% for upper end. The materiality at the lower end of 5% is 3 million. How 3 million? 5% multiplied by 60, as 60 is the PBT of 2005. Whereas at the upper end of 10%, the materiality is 6. 10% multiplied by 60 is 6 million. As Mercurio is a listed entity and there are risk of material misstatement, the material should be set at the mid end of 5%, 10%, which is 7%. Don't use 7.5, just write 7%. At 7%, the materiality is 4.5 million. This materiality is set at the planning stage. Means we are at the planning stage, so we can revise or change the materiality at different stages. This materiality is set at the planning stage and can be revised at a later stage depending on the circumstances. If you want to write this line, it is okay. If you don't want to write, then no need. Now, risk of material misstatement. Risk number one, assets from Lake Whale Company. The cost of the purchase of 20 stores from the Beck Whale Company by the Mercurio Company is material to the financial statement, as 171 million cost is above the materiality amount, as 171 million is above than the 4.5 million, so it is material. Now, once you write the materiality statement, then you will have to write the accounting treatment. These stores need to be refitted, but the use of these stores has not yet been decided by the management. If the management has the intention to use these stores in business, then those stores will be recognized as per IAS 16. However, stores that will not be retained and sold should be classified as per IFRS 5 non-current assets held for sale at fair value less cost to sell, and any difference between carrying amount and fair value less cost to sell will be reported to profit and loss. This will be your accounting statement. After this, you will have to write a risk and its impact. Therefore, failure to decide the intended use of the 20 stores at the year end results in an understatement or overstatement of assets. How understatement and overstatement? Understatement means if all the assets written down as per IFRS 5 and there will be no depreciation. Also, how overstatement means if all the assets become part of non-current assets. Now, risk number two, healthcare plan. The healthcare plan covers 10% of annual income, which is 80.3 million, is material to the financial statement as it is above the material amount. This is your revenue figure. Okay. As per IFRS 15, revenue from contract with a customer specifies that revenue should be recorded or recognized when performance obligations have been satisfied, either in point in time or over time. In this case, customer can pay as they go for appointments and treatment of their animals. This shows that the customer pays in advance and the Mercurio company records the revenue in advance instead of spreading it over 12 months. Means instead of recording it over time, they just record it at point in time, even though no performance obligation has been satisfied. Therefore, this results in an overstatement of revenue and an understatement of deferred income. Furthermore, if you write this line as well, then it will give you half mark extra. Furthermore, it can be seen that the revenue has increased by 7.8% this year, which is a significant hit. You can also write that there are no revenue from the new brand range. Okay. Now the trade receivables. The increase in trade receivables of 20 million is material to the financial statement as it is above the amount of the materiality determined based on the profit before tax as above. As per IFRS 9 financial instrument, an impairment of receivables should be recognized if there is objective evidence from the customer that the customer is unable to pay. Stage 3, remember. However, in the case of Mercurio company, the significant increase in receivables is 90.9%, and the 60-day credit period shows that there is a risk of bad debt and Mercurio company may not be able to recover its debt. Therefore, failure to record bad debt expense results in understatement of expenses and an overstatement of trade debts. If you are not recording bad debt, so of course your trade receivables will increase. Ultimately, your current assets will increase and your expenses will be decreased. So means there is a possibility to increase the profit. Why to increase the profit? In order to obtain the funds. Holiday pay obligation. The amount of the holiday pay obligation of 21.1 million is material to the financial statement as it is above the amount of materiality as calculated above. The holiday pay obligation is based on management estimates, and in estimates there is a significant inherent risk. Inherent risk, if you don't remember this question, then sorry, this concept, then watch my lecture on audit risk under the block 3 playlist. Okay. Inherent risk as estimates involve subjectivity and judgments that can easily be manipulated by the management because of management biasness. Furthermore, the increase in obligation pays 82% this year as compared to last year, but still there is a possibility that the obligation might be greater than the amount recorded. So based on that, there is a risk of understatement of obligation and overstatement of profit as the operating profit only increased by 0.63% this year. Now, goods in transit. Mercurio company's purchase of 12 million of pet food from an international supplier is material to the financial statement as it is above the amount of materiality. After that, you will have to write IAS2 accounting treatment. As per IAS2, inventory shall be measured at lower of cost or NR as the goods during transit got an accident and the entire supply of the goods was damaged. The NRV of the good is zero. If all the goods are damaged, so of course their NRV will be zero. Mercurio company should record it at NRV which is zero. Therefore, there is a risk that the Mercurio company may not record the goods 12 million at NRV, which is zero, due to which there is an overstatement of assets, means inventory, and an understatement of expenses, as no NRV loss is recognized, which can be identified that the expenses are only increased by 0.63%. You will have to use your calculator and you will have to be good with mathematical figures. Otherwise, you will not calculate this increase or decrease, which shows that many expenses are not recorded by the Mercurio company. Still, I am giving you a room. If you are facing difficulty, please comment down. Otherwise, I don't know where you guys are lacking. So please try to comment below the video so that I can understand where you are lacking. Then I will cover that concept in my next lectures. The amount of insurance claim for the 80% of goods destroyed is 9.6 is material to the financial statement as the correspondence from the insurance company in an informal email states that the claim had been received and was due to be processed shows that the inflow is probable, so disclosure of contingent asset should be given in notes to the financial statement. Therefore, there is a risk that management may not give adequate disclosure in notes to the financial statement. So that's it for risk of material misstatement. And in the end, you have to write a conclusion. I don't know why I have not mention a conclusion here in this slide, even though I have write a conclusion in my Word document. Just let me give you an overview about the conclusion. If you go through my risk, I have prioritized my risk based on materiality amount. Let's say my first risk, the amount is 171 million, and in the second risk, the amount is 80.3 million, and in the third risk, the amount is 20 million. So I have prioritized based on the materiality. So in the conclusion, you have to write that the above mentioned risk of material misstatement are significant. Why? They are material by amount, as you can see that they are prioritized based on the materiality. So that's how you have to write a conclusion. Now part C, impact of outsourcing. This I will want you to solve for your understanding, even though I have covered this in my topic of block 1 lecture, and the topic is outsourcing. So this I am leaving for you. Let's move to the audit procedures. Okay, again I am repeating, whenever there is a question on audit procedures, use the terminology CASP. C is for case specific, A for action, P for purpose, S for source. CASP, case specific, action, source, purpose. Let's feet, obtain an understanding of the controls performed by the internal audit department on payroll to ensure the operating effectiveness of control. We are writing a procedures on the holiday pay obligation. If you remember the holiday pay obligation paragraph, it was mentioned that the internal audit department performed TOC on the payroll department, and there was a new HR or payroll software integrated, due to which there are duplication of employees. Okay, obtain employee record from the HR department and compare them with last year's record to identify any joiners or leavers during the year. Obtain an understanding of the systems used by the Mercurio company for recording the staff to ensure that correct records are posted into the system at the time of merging them. Discuss with management the reason for maintaining the manual records for holiday entitlement, even though the system has the capability. Recalculate the manual records maintained by the HR department regarding holiday entitlement to ensure the accuracy of the management's calculation. Correspondence with the employees to confirm the 3-day unused holiday entitlement policy to be carried forward to the next year. Means whether the holiday entitlement policy is encashed or not. Obtain a list of joiners and leavers and compare it with the changes in staff level used by the management in estimating a holiday pay obligation. Discuss with management the basis of a significant 82% increase in holiday pay obligation, and the impact is not in line with such an increase in expense. In the end, you have to write best regards, audit manager. So that's it for question number 1, Mercurio, December 2022. Tomorrow we will solve question number 2, and day after tomorrow we will solve question number 3. So be attentive, because now we are going to solve complete past paper questions. No more topic wise questions, as we have done the topic wise questions. Now we are going to solve full-fledged past paper questions. So if you are behind, or if your preparation are not up to the mark, so again you guys may mishap with yourself. So if you have any queries or any difficulty in these questions, you can contact me. You can also comment down. I will respond each of you frequently. So take care and goodbye.